Hi, fellow traders and investors. This is Joe Gruender from InvestorsHelp.net. Several of my subscribers have been asking me, what am I going to do with the position I'm currently in on AVGO? If you recall, I went into 200 shares back here on the 12th of February at an entry price of 109.37. We're up here, today is the 23rd of February. One of the things that I notice, and it's critical to me anyway, is right here. And that is the earnings. You can't see it here, but the earnings is after the close on the 25th of February, which is Wednesday. So let's take a look at a quicker chart to see where we are, what's going on. We did have an interesting today that I want to show you. Okay, here I am at a 5-minute chart. Now I know some of you are investors and you never look at a 5-minute chart, but I do swing trading, sometimes I do day trading, sometimes I do investing, and I'm always looking for interesting chart patterns. So let's take a look at the price action today. I'm going to close, or let me just reduce some of my other indicators. In a future video, I'll get into more detail on what these indicators are, why I use them, and how you too can use them. But that's for another day. Okay, this morning, as you can see, it closed here yesterday at approximately 112.06 or thereabouts. It opened today up here at approximately $113. So this we call a gap. Okay, it had quite a jump, and if we look at volume, we'll see more on volume, but I don't want to go into that right now. What I do want to show you is that frequently price will retrace approximately 50% of the gap. So what I do, I put a Fibonacci lines on here with the high in the early morning at the value of 113.25. The low is the bottom of the candle prior to close. And then we have automatically drawn the three support lines, 38.2, 50.0, and also 61.8. Price will usually come back to approximately the 50% retracement. Sometimes it goes to the 61.8, and then it will retrace back up. It'll bounce back up off of these support lines. This is the ribbon indicator, and I'll explain that to you also in a subsequent video. It's a very powerful indicator. I've been using it for years, and I found it very profitable. Now, today, this was not a breakaway gap because when price retraced up here back to the 112.99 or 113 line, it couldn't go any higher. A breakaway gap or a professional gap, price would have continued up, okay? But it failed. It wanted to retrace, it wanted to close the gap for the day. And this is the most common occurrence with your gaps. They close. So we had to wait, and then finally the gap was closed back down here in this area. Here was the high. So we draw a line and the gap was closed here. So that's a good signal to that price is going to turn around and go up once again. So for you day traders, this is an excellent opportunity to get back in and grab maybe 50 cents on 1,000 shares, which you can earn, $500, $400 or $500 in a matter of less than an hour. Now, I entered this trade, as I mentioned, on the previous chart, and on the 12th, let's go back to the daily chart and let's take a look at that. Okay, here we are on the daily chart. As you recall, I entered the position on the 12th of February at 109.37, 200 shares. Today it closed in the area of 112.85. So that means our current profit on the books, unrealized profits, it's only paper profits at this stage, is $695, which is 3.2%. So nothing earth-shaking. And of course, $695 in for 7 days of trading is okay. It's nothing special. I'll do a post review, I think, to show. I believe, looking back now, I got in too late. I was trying to buy here on the breakout, and I was late because I was doing something else, so I messed up there. But anyway, I have a rule for this type of trade that I want to get out of the position the day before the earnings announcement. Too often, even if there's good earnings, price can retrace. So I don't want to give up $700. Maybe tomorrow we'll pick up another $150. So maybe $800 or $850 of profit. I don't want to take the chance of giving that up on Wednesday after market close. Now, of course, life being what it is, this is a great stock to be in, and if it has good earnings, higher than anticipated, it'll probably gap up maybe to 114, 114.50 or thereabouts, and then I'll be kicking myself all day as it is on Thursday. But I think it's better to take my profits. I can always get back in once price retraces to one of my support lines. So I'll probably be getting out of this position tomorrow, hoping to capture somewhere between $700 to $800 profit. And like I mentioned, I'll probably do a review later in the week or maybe on the weekend, doing a full analysis on what I did right, what I did wrong, and what I should have, would have, could have done. But anyway, so that's my plan for tomorrow. I don't want to get greedy. I think $800 is a pretty good profit for just a few days of work, even though it's only 3.2% currently, and maybe it'll be 3.5% or 4% tomorrow. At least I'm hoping. So good luck. You do your own research, make your own decisions. And decide for yourself if you're going to take a chance and ride through profits and see what happens, or if you too are going to take your profits off the table and wait for another day. So good luck to everyone, regardless of what your position is. And this is Trader Joe signing off from investorshelp.net. You take care. Bye for now.